Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a morning Forex Kickstart report where I take a look at three of the major currency pairs of the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. Today's date is October 17th, 2023. Let's get started. Looking at the euro versus US dollar, the New York session started with the price extending to the upside. As a matter of fact, we moved above both the 100 and 200 hour moving averages, but the retail sales data came in much stronger than expectations, and we saw a whipsaw back to the downside, back below the near converged 100 and 200 hour moving averages, near the 1.0560 area. Staying below those levels, those moving averages would keep the bias more to the downside here in this currency pair. What we didn't do is make new lows. The low price that we saw in the European session stalled near 1.05316. That was near this swing area going back in time to these points and off of the hourly chart where we had just a number of different swing lows and swing highs. It was a little sloppy at times, but in trading yesterday, the last two lows here came in at the 1.0525 level, the low of that area, and forced the price back to the upside. So we come back to the high of that area at 1.05316. It would take a move below this area to increase the bearish bias toward this swing area between 1.0483 and 1.0500 in this currency pair. Again, stay below the 100 and 200 hour moving average, keeps the sellers more in control. We are seeing yields move higher, of course, after the retail sales data. The 10-year yield is currently up around 12.4 basis points at 4.834%. The 2-year is up 7.3 basis points, currently comfortably above the 5% at 5.17%. So that is forcing yields or the dollar higher. We'll get some Fed speakers later today and this week that are going to also lay the pipe for the November 1st Fed meeting, where market's still unsure whether or not the Fed is going to go ahead with another hike or not. The retail sales today point to continued strength in the consumer, which could lead to continued inflation, which could lead to a continuation of the Fed hikes. We will see. Let's take a look at the dollar versus yen, and it had a sharp fall here in the just before the New York Open. That was on reports that the Bank of Japan was raising their inflation expectations, and so we saw the price rotate quickly to the downside, about 100 pips to the downside, and stalled right at the 50% midpoint of the move up from the September low, and also this low right here. So this both the same thing. 50% of it comes in at 148.73, and that's where the price found support against. That level. It was an old level that we found support against even after the sharp move down here in the earlier this month. So we did see a rotation back to the upside. Of course, retail sales and the higher yields also pushed the price to the upside as well. And we're back above the rising 100-hour moving average at 149.467, also above this swing area right through here, where we had a number of different swing lows and swing highs going back in time, and got a little messy through Friday's trade, but yesterday, or actually today, the market held support against that level before rotating to the downside and rotating back to the upside. So watch that 100-hour moving average. As long as we stay above the 100-hour moving average, bias remains more to the upside. The high prices from last week came in at 149.82-ish type level. Getting above that level, you can see we are finding some resistance sellers against that level. Why? Because risk can be defined and limited against it, and so there's somewhat of a lid against that. Get above it, and opens the door toward the 150 area. The high price from the JOLTS job data back here reached 150.15 before concerns about maybe the Bank of Japan might come in, sent the price sharply to the downside before rebounding back to the upside. So the 150 area is still going to be a level of concern for traders, a level of fear for traders. Get above the 82 level, opens the door. Stay above the 100-hour moving average, keeps the buyers more in control. Let's take a look at the sterling versus US dollar lastly, and it too moved lower after the retail sales, making new lows for the day in the process. However, we did not get below the low price that we saw from Friday's trade here just yet, at least. We are below this swing area between 121.59 and 121.67. Stay below that area. Keeps the sellers more in control, and so watch that and as a risk-defining level for traders. My poor handwriting. There on the downside, look for this area right through here. You can see the importance of it from a swing low there, swing highs and lows through here, moved above it here, and you found support against it here, here, and here. So this area between 121.05 and 121.109 is going to be a key level that, if broken to the downside, higher dollar should see further selling pressure in the sterling versus US dollar. Conversely, if the price finds some support buyers here, and we may, because this, and this, then rotation back toward this sell area would be warranted. Right now we're trading in between the two swing areas. So there you have it, a kickstart to your Forex trading. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.